Purva congratulates her boss Prakash and says, "Sir, you got a good increment, but you have not given any treat. At least offer an ice cream today." Prakash agrees and offers to buy an ice cream right away. At the kiosk, Prakash asks Purva to choose the flavor. All. She says she likes all but is confused to choose one. Prakash laughs and says, "You seem confused like those mutual fund investors who are unable to decide which fund to choose out of mid, small, and large cap. And to be honest, for those investors, I have a solution. But in your ice cream case, I can't help you, dear." "Is it? What solution do you have for such investors, sir?" asks Purva. Prakash says such investors can invest money in multi-cap mutual funds. When we talk about the mutual fund industry, there are many categories of funds like large cap, mid cap, small cap, and balanced fund. Investors are always in a dilemma as to which fund to choose for investment. Similarly, while investing in the stock market, investors are worried whether to invest in large cap funds, small cap funds, or mid cap funds. For those who get stuck in such confusion, the share market has an option of multi-cap funds. Such diversified equity funds are those that invest in companies with different market caps, meaning by investing in a single fund, you get the benefit of investing in many types of companies. SEBI has set up a criteria for investments in all types of funds. For example, a large cap fund has to invest 80% of its assets in large cap stocks. Small cap fund has to invest 65% of its assets in small cap funds. Multi-cap funds are now becoming popular among mutual fund investors because of their flexibility. According to a new rule of multi-cap applicable from January 2021, SEBI has intimated the fund houses that they will have to invest at least 75% of their allocation in equity or related instruments. They will have to invest 25% in the shares of large, small, and mid-cap companies, that is, all three, and they can invest the remaining 25% in any instrument of their choice. That means multi-cap funds also come under the category of equity funds. The major advantage of investing in multi-cap mutual funds is that you get exposure to a broad portfolio of stocks and equity-related instruments of companies across sectors and sizes. This is how most of the stocks give good returns when the market rises. But when the market starts falling, the losses in the entire asset of the fund are less, owing to the fall coming short in large cap stocks. This results in moderate risk in multi-cap funds. If you look at these funds in the long term, then the fluctuation is less compared to mid-cap funds. However, the risk involved is higher in these as compared to large cap funds. A multi-cap fund invests in companies across a range of market caps. That is why the opinion of a fund manager is important in such funds. In this scenario, before investing your money, check the track record of your fund manager, and also the long-term track record of that fund would be a better suggestion.
In September of 2020, SEBI introduced this category which requires the scheme to invest minimum 25% in large caps, minimum 25% in mid caps, and another 25% in small cap. So that is the basic structure of these funds, and the fund manager has the discretion to invest the remaining 25% wherever he or she finds an opportunity. And this particular category was introduced to basically reduce the drawback which flexi-cap funds were having, because flexi-cap funds as a category were becoming more large cap oriented. Since they had the freedom to move across the market caps, they were more, conservative in their approach, and majority of them are currently large cap oriented. So multi-cap is truly a fund which can give you exposure across different market caps. And I think this is a good category which can be part of any investor's core portfolio.
You will have to keep a watch on the portfolio of a fund. You have to see the history of past year investments. Multi-cap funds are not limited to investing in a single sector. It is also important for investors to keep an eye on sector-wise trends. Multi-cap funds can also be a great way
to start systematic investment plans, that is SIPs. With this, you can take advantage of investing in the broad category of the stock market even with a small amount, that is 500 rupees.
You will have to keep a watch on the portfolio of a fund. You have to see the history of past year investments. Multi-cap funds are not limited to investing in a single sector. It is also important for investors to keep an eye on sector-wise trends. Multi-cap funds can also be a great way to start systematic investment plans, that is SIPs. With this, you can take advantage of investing in the broad category of the stock market even with a small amount, that is 500 rupees. Now let's also find out what types of investors should invest in such funds. Multi-cap funds are good for investors who themselves don't want to get into a mess of which shares should be selected or what kind of market cap to choose. It's suitable for those investors who can bear a moderate risk and can invest for the long term. It is suitable for those new investors who are looking to diversify their portfolio, means who want to invest by keeping large cap, small cap and mid cap shares in one portfolio. By doing this, the risk is moderate and it is very effective even when the market is volatile.
So in terms of time horizon, because multi-cap funds bring and are giving exposure to small caps as well as mid caps to any investor, I feel the investment horizon has to be long. So please think in terms of 7, 10, 15 years and more. Don't look at 1 or 2 years or 3 years when you're investing in a multi-cap fund. These kind of funds can be a very good fit for majority investors because they're giving you the broader allocation to the markets. And I think anywhere, between 10 to 20 to 30% also, depending on the structure of what is the current portfolio of the investor and what are the goals and investment horizon. Based on that, the allocation can be decided. But it's a basic product which can be part of the core portfolio, and I think investors can look at it.
So don't get confused between flexi and multi-cap funds. Many people think that flexi-cap funds and multi-cap funds are one and the same. These both funds look alike due to their identical nature. In both of them, the maximum investment is done in equity, that is shares. In both types of funds, investments are done in mid-cap, large-cap and small-cap companies, but the basic difference here is that flexi-cap funds are more flexible in terms of investments. These funds keep rotating the portfolio between large-cap, mid-cap and small-cap funds within the limit of 65% equity investments, but the ratio has been fixed in the multi-cap fund.
Now, also know how to get the return on multi-cap funds. Multi-cap funds give good results in the long term. Speaking of the top funds that have given excellent results, Baroda BNP Paribas Multi-Cap Fund has given approximately 31% return in 3 years and 14% return in 5 years. Similarly, Kotak India Growth Fund has given approximately 37% return in 3 years and 18% return in 5 years. ICICI Prudential Multi-Cap Fund has given 31% return in 3 years and 14% return in 5 years. This is according to a data by Value Research.
So we can conclude that multi-cap funds give relief to those who cannot choose the best stocks on their own. By investing in these funds, you get the benefits of diversification. Investors who can invest for a long term, more than 5 years, get good results by investing in multi-cap funds. Multi-cap funds are a good option for diversification and long-term wealth creation. But also keep in mind that investing money for a short term in these funds can be risky because a minimum of 50% of these investments are kept in small cap and mid cap shares. So investing in both types of stocks can be risky for the short term.